believe Mr. Scott Cooper, Esquire, is here, who is appearing on behalf of the Pennsylvania Association for Justice. And I understand that we also have persons here from the Pennsylvania Department of Insurance. Do we have the Commissioner, Michael Considine? No. Okay, so you're not on my agenda, so I'm going to ask you to introduce yourselves in terms of who you are from the Department of Insurance.
Correct.
Please go right ahead.
Thank you very much. Good morning, Chairman. Good morning, Commissioners. Thank you for inviting the Insurance Department to provide information on this important hearing. My name is Randy Rohrbaugh. I'm the Executive Deputy Insurance Commissioner. Part of my responsibilities is reviewing insurance products to make sure they're compliant with the insurance laws and regulations in Pennsylvania, as well as rates to make sure that they're not excessive, inadequate, or unfairly discriminatory. And I also allow my partner here to introduce himself.
Morning. I'm Art Nolte. I'm the Deputy Insurance Commissioner for Office of Market Regulation. And I'm here with members of the Commissioner our perspective. There were written comments provided by Commissioner Considine. Send his regrets. Thank you.
Thank you. And with that, we will start with Mr. Marshall. Mr. Marshall, please proceed with your testimony.
Thank you. This continues to be a huge learning curve for our industry. It really doesn't matter what you call it, transportation network services or part-time cabbies and cabs. The insurance ramifications and the nuances are significant and not always obvious. That's true for insurers, that's true for this commission, it's true for the insurance department, it's true for the General Assembly, and most important, that's true for the drivers of these TNCs, their passengers, and anybody who comes into an accident with them. You have our written remarks from a week ago showing the ongoing learning curve. We have some new concerns and developments to share, and we're just absorbing the California bill that passed with shared support of our industry and the TNCs. It passed one chamber yesterday, and I think it's set for a concurrence vote today. I think that may be a good template. And in any event, I hope it's part of an ongoing dialogue. A couple of points here. First, I think the insurance requirements that you require now in Section 3211B for taxis, I think that's about right for TNCs. Setting that amount is more an art than a science, but we don't hear many complaints that it's either too much or too little, and we don't hear consumers complain that they can't find the underlying insurers or get the claims paid. Second, the challenge with TNCs is making sure their drivers and cars truly have that level of insurance, both in the amount of the benefits and how they can be accessed. On the amount of coverage, I'm always wary when an entity says it's providing more insurance than the law requires or other competitors provide. That usually means the entity has some unique conditions or omissions or caveats. Much as I believe in insurance, most people in businesses buy too little, not too much. TNCs should provide all of the coverage that you now require of taxis, and that includes first-party benefits that are listed in your regulation. It isn't just about the amount of coverage, it's about the specific benefits covered. You need to make sure the TNCs require all of those benefits. They can't be allowed to circumvent or to shift to personal insurers the first-party benefits other taxis have to provide. And you do need to make sure that there are no unique limits or caveats in their contracts or their applications that they have with the drivers or the passengers. On the access to the benefits, make it simple. Make it one stop. A TNC, just like any other taxi, you should have one readily identifiable and accessible insurer. Forcing consumers to go look to multiple policies and multiple carriers, as with those of TNCs, just using it as an example, TNCs and the personal auto insurers of their drivers, is tantamount to giving them less coverage than the regulation requires. It can also mean unintended gaps in coverage because the TNCs aren't coordinating with their drivers in providing the coverage you require. The California amendment that came out yesterday is very strong on that in terms of clarifying that the TNC coverage should be exclusive and that the personal auto insurers are not involved in those stages 1, 2, and 3, or on app, on match, and in operation, whatever you want to call that. Third, I do think the insurance issues have to be much more open than we've seen so far. That's part of a legislative dialogue, that's part of a commission dialogue. I would recommend that you require not just a certification that a TNC has fulfilled your insurance requirements, but that you get a copy of the policy that purports to satisfy that, and that you get verification from the insurance department that it in fact does. I'll go to Commissioner Powson's motto, trust but verify. I think that's very important in insurance. Certification alone doesn't quite get you there. I think you should also tell the TNCs, require the TNCs, that their drivers should notify the personal auto insurers about the change in the insurer's use of the car. That needs to be part of what I would hope would be a much more cooperative relation between the TNCs and the personal auto insurers. And that's not, I mean, selfishly from an insurance perspective, that is so that we can accurately underwrite and rate and assess the risk that we're being asked to take on. But it's also to ensure the proper coverage for the TNC. It may legitimately condition its coverage for its drivers and their cars on the driver in the car having proper personal insurance that satisfies the state's, the Commonwealth's laws on that. But how's it going to know, absent an ongoing relation with the personal insurer? Again, it goes to trust but verify. You simply don't know that unless there is notice to the insurer, and the insurer on an ongoing real-time basis is working with the TNC as to whether the driver continues to have in-force insurance. Fourth, I'd say take a deep breath and let's do this right. I get the enthusiasm for TNCs, but that doesn't make them getting up and running an emergency. It doesn't mean letting them on the streets without first resolving the insurance concerns. There's an old saying in our business, who insures you doesn't matter until it does. You have the opportunity to get this right from the outset, working within your existing powers and maybe expanding on them. I think the statutory authorization you had gives you considerable discretion, and it's a matter of revising or tinkering with your regulations on that. We look forward to working with you, and we look forward to working with all the other partners, including TNCs, on this. Thank you.
Thank you, Mr. Cooper. Mr. Marshall, Mr. Cooper is next.
Thank you, Your Honor. Chairman, members of the commission, my name's Scott Cooper. I'm an attorney with Schmidt Kramer, and all I do is personal injury plaintiff's work. As part of that, I represent a lot of people who are injured in car accidents and generally get involved in the case after they've gone to their insurance company and found out that there was a problem or an exclusion or some coverage they thought they had that they didn't have. I'm also past president of the Trial Lawyers Association for Justice. So what I'd like to do is pick up where Mr. Marshall actually left off, and I think that's the important part of this proceeding is there is no emergency, but also it's almost like putting the cart before the horse in this situation, because this is a unique opportunity to get something right before something bad happens. And what was referenced earlier today by Representative Mustio it was the for-hire exclusion. The thing is, that could be rendered ambiguous in some circumstances. A lot of insurance companies, personal insurance companies, have now gone to specific exclusions where they exclude, and it specifically refers to, I'll just read it briefly, for liability, medical payment, uninsured, underinsured motorist coverage, and property damage coverage for losses to your auto which occur while enrolled in a personal vehicle sharing program under the terms of a written contract and being used in connection with such personal sharing program. That's what this service is. And it's specifically excluding any of the coverage like we're talking about in this case from the personal policy. So what is most likely going to happen is most insurance companies will have these exclusions in the person's private policy. Then they're going to go to the insurance policy for Uber or Lyft, which is the $1 million that everyone's talking about. The problem with those policies, and I think I've only seen one, there's a generic one on the internet, it's the James River Insurance out of Richmond, is that hasn't been filed with the state. It hasn't been approved with the state. That's submitted, I think, to Mr. Rohrbach and the insurance department to make sure it complies with the minimums. For instance, at least the one I was able to print up off the internet, it provides the coverages, but it doesn't have mandatory medical coverage of $5,000. It doesn't have mandatory property damage coverage. It has certain provisions that are just not allowed by Pennsylvania law. For instance, it has a 2-year statute of limitation provision if you're going to bring a claim under the contract, where Pennsylvania has a 4-year statute. So from our perspective, we think it's important to get it right, that everyone sees what the policy provisions are going to be with these plans, are submitted, and that the insurance department look at the provisions, make sure that the rating is going to be adequate too, and then go back once it's been approved. At the same time, that also guarantees that this gap between stage 1 and stage 3, when the app is turned on, to the time that the person is on the clock, for lack of a better term, is picking up. Because what happened in that San Francisco case, the person was driving around looking for a fare, caused the accident, and there's no coverage because he's looking for the fare, and there's no coverage under this policy because specifically the endorsement only covers the driver while he is en route to picking up that passenger or transporting that passenger. And that's at least on the covered endorsement of the only policy I've been able to see. So what we're at least hoping is that, like Sam said, everyone gets it right, and that we don't have a situation where it's approved and then everyone goes back and tries to fix the problem in the policies later. The legislation that's been introduced is great. The problem with that is there's only 9 legislative days left, and it's really hard to get anything. It's hard to get a bridge named after someone in legislation passed in 9 days, let alone something as controversial as this. So although we would hope it would be passed, that's probably unlikely this term. In addition, if you look at the California experience, it appeared, I read an article 4 days ago from the LA Times, that Uber and Lyft were actually lobbying against that legislation until this amendment was passed. So not to, think conspiracy theorists, if you approve them, then the legislation gets passed that they're saying they would probably follow, but they're going to lobby against it, and then it just delays things. So we would just hope that everyone looks at this and vets it properly, and the insurance aspects be solved first.
Well, thank you, Mr. Cooper. We next have the Department of Insurance. Mr. Robart, Ms. McNulty, were you here to make any comments, or are you just here to answer any questions?
That's correct. We welcome any questions that the commissioners may have for the insurance department. I know some of the information that you've been provided is very complex, and we'll try to help clarify wherever we can.
Questions from the commissioners?
Commissioner Brown.
Thank you. In terms of one's personal insurance and the requirement that they give notification to their insurance carrier that they are participating in one of the TNCs, the question I have is, do you think that there should be some protection for these independent contractors when they're giving notification that then they're not going to have a spike in their insurance rates for their personal coverage, or even cancellation of their insurance?
It's an excellent question, one that we can't predict the future on right now because the marketplace really hasn't been approached in a proper manner to determine how they're going to react. Frankly, some of the testimony you heard here this morning, if you look at the personal insurance policies, you'll find that almost all insurance policies exclude coverage when the vehicle is being used in the business of a delivery service. So you heard Mr. Cooper indicate that some companies even are going one step further and indicating that not only delivery service is excluding coverage, but also the new TNC usage would be excluded under the policy. So it's very concerning to us from our viewpoint to understand how these various TNC companies are proposing to use the personal insurance as a primary insurance vehicle when in fact the insurance would be void in those conditions. We do strongly support that consumers, if they intend to get involved in these businesses, work with their insurance companies, work with their insurance agents to determine what coverage exists, what gaps may occur, and proceed from there. There is commercial insurance available for livery companies. There's been many years where individuals have used their personal vehicle in commercial businesses. House painters, for example, have been using their trucks and station wagons to haul paint and ladders back and forth. And once they report that to their insurance companies, the policy is extended to cover those kind of risks. Once they're known, they can be covered, and the policy can be endorsed to have commercial coverage on it. Same thing exists in the homeowners marketplace. If you decide that you're going to run a business out of your home, your policy can be endorsed to add commercial protection for the clients you bring into your home, whether you're a hairdresser or CPA doing taxes. This is very early in the marketplace development and the innovation in personal auto because the situation is very young. We do know the companies are looking. We have been told that some companies are looking to expand their personal policy to offer commercial coverage to TNC-type drivers. Likewise, I know companies that will likely cancel or non-renew policies once they learn that their drivers are using their personal vehicle in the livery business.
And to that end, Commissioner Brown, the real protection is at the outset. That the person who is thinking of or contemplating becoming a TNC driver before embarking on that notifies his personal insurer so that he can see what happens. And it's premature to figure out, to say whether they need the protection, because what we don't know, certainly based on the applications that we've seen to date in Pennsylvania, what we don't know is whether and to what extent there will be an added risk exposure. What you don't want in the world of insurance is an added risk or exposure by one person being unfairly subsidized by others, those who don't become TNC drivers.
And if you report it to the company, that's important, but the reason right now that the insurance policies need to be looked at, if I'm someone and I call my company and say I'm going to be a TNC driver, what do I have now? I have an Infinity policy, I have an Infinity personal policy with an exclusion, and I have an Uber or Lyft insurance policy that I don't even know what the coverages are. Maybe one thing is also to have the insurance policy for the TNC be provided to the driver to give the insurance company so that as part of the application process, so it can be reconciled.
Thank you. And a follow-up. In a situation where an individual allows for whatever reason, by mistake or whatever, they haven't paid their insurance for the personal coverage part of it, and that lapse, what would happen to then the commercial part through the TNC?
That's one of the reasons that I say notice is important on an ongoing basis, because if that person's auto insurance lapses, then that person is not a lawful driver. That car is not allowed to be on the road. I haven't seen, and it's certainly not clear in the Form E's that I've seen to date, but I believe, and this is something that needs to be clarified, with TNCs as they go through the application process, but I believe that if their driver and if the car is not lawfully licensed and registered in the Commonwealth, then I would suspect that their insurance policies won't kick in either.
Okay, thank you.
I would add that in a situation where the personal policy lapses, there's several other complications that occur that could be harmful to the driver or the policyholder. For example, they would be in violation of the Department of Transportation requirement to carry insurance, first of all, so their registration is now void. So they're driving what would be an unregistered vehicle. Secondly, if those folks that are driving have taken a loan on that vehicle, and that vehicle then is involved in an accident, the lien holder or the lender is now jeopardized by not having proper protection, and they've likely voided their loan contract.
Thank you very much.
Thank you, Commissioner Brown. Now I'd like to recognize Commissioner Cawley for purposes of questions.
Thank you, Chairman. I want to particularly thank Mr. Marshall for his thorough testimony. I'd like to read part of it that really caused me to ask my earlier questions. You say on page 4 that the Commission will need to look at more than the insurance policy and the TNC, that the TNC submits to it. we need to look at the contracts the TNC has with its drivers and with its passengers, and to make sure nothing in either of those contracts imposes unique and unreasonable terms or conditions to accessing the TNC insurance policy. And then you say, as an example, the TNC may have terms and conditions on passengers becoming part of its app process, whereby they agree to first go through their own insurance or to accept some unique form of arbitration. These types of conditions are often buried in the fine print of a click-on process of accepting an application, meaning consumers won't be aware of any unique terms until after an accident. I mean, needless to say, what we don't want is for passengers or injured third parties or even injured drivers to learn after the fact that they're either not covered or that they're going to be in legal limbo for months on end while the insurance companies duke it out as to who is responsible for paying the claims. And that's why I asked the earlier legislative panel, please clarify the law to make sure that the insurance companies know that when they give us Form E, that all of this is clarified and then the responsibilities are clear-cut. So I thank you for pointing that out. And if I missed anything here, let me know. But I am concerned that we do not have the expertise to be looking at insurance contracts and determining whether they are adequate or not. That just isn't what we do, and maybe we need to enter into a memorandum of understanding with the insurance department, but I think the better answer is to make the insurance companies be fully aware of what the law is and what the requirements are, so they won't issue a Form E for us to rely on unless all of this is clear and the responsibilities are clear.
And I think, Commissioner, it's important to look not only at the insurance policy itself, and Scott had mentioned, and we've mentioned some of the possible deficiencies. We haven't seen the most recent ones, but we've seen, but we've talked about possible deficiencies, and they can vary not just in benefits covered, but also in things like statute of limitations or arbitration provisions. But it is important to look at other contracts that a TNC or any taxi service would have with its drivers or its passengers that may then impact the insurance policy. So you have to go, the challenge in your current regulatory structure is that when you go into insurance, you have the insurance company, the insurance provider for the livery service, for the taxi service, submit the policy. But that policy alone may not tell you the full story about compliance with your current regulations or whatever you may deem to do. You need to look at the TNC's contracts with its drivers and with its passengers, because that may also impact the insurance conditions and coverage.
Thank you, Commissioner Cawley. Now I'd like to recognize Commissioner Whitmer.
Thank you, Mr. Chairman. For the insurance department folks or Sam, is the capacity available in the market, in the insurance market, for the $1 million coverages that we've been talking about?
I would say the Pennsylvania insurance market definitely has the capacity. Whether or not there's a willingness, there are two different questions here.
Okay.
The business of taxi drivers, livery services has always been a very sensitive subject as far as I can look back into my history, and I have over 40 years of experience in the insurance marketplace. These type of coverages tend to go into the surplus lines marketplace where there is absolutely plenty of capacity. The question is whether or not the underwriters want to take the risk. There is a lot of uncertainty in the business of livery services, with the drivers, with the vehicles, with TNCs, and with passengers. So the majority of the coverage that's written in this marketplace is written through surplus lines. It's legitimate coverage. They're A-rated companies. They're just licensed in a different mechanism than our admitted companies in Pennsylvania. Pennsylvania has a very vibrant auto insurance marketplace, over 150 insurance companies doing business in the private passenger marketplace. It's a soft market, plenty of competition. All you have to do is turn on your TV set, and you see lizards, and you see, pressure guns. And so I would suggest the capacity is there. Again, I can't answer the question on whether the insurance executives want to take on this type of risk.
On behalf of insurance companies, you asked the question in capacity in terms of the aggregate amount. And
I was actually asking, is the interest from the brokers there to write?
But I think one of the, and in terms of, would there be an availability of $1 million worth of coverage for all taxi services? One of your questions, beyond is there a need for it, which is a separate distinction, that goes to what I talked about before. That's not currently required, and we're not seeing consumer complaints or deficiencies in your current levels in your regulation. But should you elect to increase that amount, it's not just what the dollar amount is, it's what the conditions are. It might be much easier, for instance, and Scott Cooper made reference, might be easier to offer $1 million worth of coverage if you have a 2-year statute of limitations as opposed to a 4-year statute of limitations. So there are conditions beyond the dollar aggregate or the dollar amount that may play into just how available or affordable it is. I've nothing against the surplus lines market, but do understand that if you are counting solely on the surplus lines, there are limits in surplus lines. They don't have guarantee association coverage. So in the event that the insurer goes under, there isn't that safety net that you have in the conventional, what I'll call the conventional, or the standard, or the accepted market. So I don't think you want to create a scenario where you find only surplus lines carriers coming in, and I'd be cautious if you toy with new limits. I'd be cautious in doing that.
One more question for Mr. Marshall. You'd indicated that TNC drivers should be notifying their carrier, and that we have some proof of that notification. How long, and that the TNC companies should have that within their records. How long should that be retained, do you think? What would be your suggestion?
I'm an in perpetuity kind of guy, and I realize that may not be realistic. But I think that the ETA order, the Commission's ETA order on July 24th, talked about 3 years. You may want to alter that to go with I think 4 years is sort of a standard statute of limitations provision. You may want to match that. But I think 3 years, that's, I would argue 4, but I wouldn't say, 3 is woefully inadequate. I think on that sense, the ETA order was correct. I think one of the challenges is that notice isn't just a one-time thing. Deputy Commissioner Rohrbaugh talked about what happens if somebody, and Commissioner Brown asked about what happens if somebody's policy lapses. I may have given notice to my insurer, that I've become that, but it's not just notice to the insurer. Then there has to be a dialogue between the personal insurer and the TNC carrier or company as to whether that insurance remains in force and in effect. And that's particularly true given that nobody really knows just how comprehensive the TNC coverage is going to be. The California bill sets that out. The California bill is actually very clear on just how comprehensive, and it's absolutely comprehensive, the TNC's coverage should be. What we've seen to date in Pennsylvania, both in what's been submitted and also in the legislative proposals, isn't quite there.
And if I could, on the notice requirement, I could also see that it may actually lower down the road uninsured motorist claims. And the reason, because if the personal policy holder's company notifies the TNC company that there's an uninsured vehicle, if the TNC company then would take their driver out of service because you're not insured on the primary basis, and the person's making decent money driving, it's going to give them an incentive to insure the vehicle again. So if the personal company says to the James River, this guy no longer has primary insurance, Uber calls them and says, we're not giving you any more fares till you insure it. That's one other thing. And then on the million, I think one of the things that's important is, I think the $1 million, first, it's not guaranteed. They're saying it now, but there's no mandatory minimum other than the 1530. It also, I think, at least envisions a primary policy most of the time paying initially. So, because you have to use the primary policy first. And a lot of those states, at least California and I guess Virginia, where this has come up, have higher primaries than Pennsylvania does, which is a different issue for another day. But if you're having if you're the insurance company, the first 15 or 25,000 of liability is going to be paid by someone else, it makes it easier to offer the higher coverage.
One other question for Mr. Cooper. Since we're talking here about all of our regulations and not just TNC regulations potentially, what has been the trial lawyer's experience with claims or claims against taxis and limos generally?
Limos, taxis, terrible. It's actually something we would hope that could maybe positive come out of this, that a lot of times these taxi cab companies, particularly Harrisburg, I have a lot of clients who are injured in those cabs. Either the cab companies are insured by one company out of state and they never respond, they never cooperate. Sometimes they don't even defend the claims. And we see a lot of abuse of the system, and we get a lot of complaints from injured victims.
And just one last comment. So can I have your guarantee, Mr. Cooper, that if you don't get everything you want, there are trial lawyers doing everything they want in the regulatory process, that you won't go then seeking it in the legislative forum, as you're suggesting other companies have done? It's more of a retort.
Well, it depends what's, if you look at the legislation that's pending, I have no problem, there's no problem with that. I can't speak for the organization itself, but if you took the legislation that's been introduced, Senate Bill 1457, and you passed it out of the Senate, you got it 102, 26, and 1, I can't see having a problem. But what happens is someone introduces an amendment, you tweak around with one thing, you tweak around with another, and then so if you put up 1457, I'm okay. But
It's a morbid thought, as I recognize the vice chairman for his comments, or question, excuse me.
Thank you, Chairman, and thank you, panelists, for joining us again today. Mr. Marshall, in your testimony, you address the question that I asked the previous panel about drivers who are signed on with various TNCs simultaneously that are involved in some kind of an accident. And I believe your testimony suggests that in that case that whatever damages are associated with that event are apportioned among each of those TNCs. Is that correct?
Akin to, I mean, you can apportion it, you can have coordination of benefits provisions as you find in health insurance policies. It's not at all uncommon. I mean, if you're talking about the situation where somebody hasn't accepted a ride from any particular TNC customer or whatever, but it's an individual who is a driver and he's on 3 apps at one time. And if he gets in an accident during that time, it's easily apportioned among the 3.
So there's nothing that this commission needs to do in addressing that matter. You believe that's
I think that's something that the insurance companies and the TNCs would work out among themselves, and that companies do that on a routine basis, and it's fairly efficient and expeditious. You could make it a requirement of a TNC that says it has to coordinate with any other TNCs in that scenario. They will.
Thank you, Mr. Chairman. I'm concluded.
Thank you, Vice Chairman. Let me get this off my chest. This is the strangest bedfellows panel here. I got the trial lawyers and the insurance community together, and so I want to go back. Thanks, Sam, for reminding me on trust but verify.
Not always as strange as we're not quite as estranged as the stereotypes would suggest.
Okay. So let me pick up on, I heard a little bit of agreement that 1457, Senator Fontana's bill, is something, Mr. Cooper, conceptually you could support, correct?
Yeah, it's an organization, but I like it when I read it this morning
Right.
once it was mentioned, and it has the requirements, and I just don't, not to be a skeptic, I can't see it passing so quick.
Okay. Mr. Marshall, your perspectives on 1457.
And we would say, and this goes to the learning curve that I mentioned at the outset today, we would say it still needs work. And it needs work because what is not clear in it, and first it does, that bill does not have the notice element that the commission talked about in its July 24th ETA orders. It also doesn't have, and again, I mean, you mentioned the California bill that just passed, and like you, I didn't have quite as big a screen as you have, but I have smaller, and so I've been reading it and straining my eyes. But that bill has, that language is much more detailed in clarifying the roles or the lack of roles between the TNC's insurance company and the driver's personal auto insurance company. And I think that that language is very important here because one of the things that you're dealing with in the world of insurance requirements is you have to coordinate with the personal auto insurance requirements that are in Title 75 of the Motor Vehicle Responsibility Law. And you need to make sure that, and it's particularly true with first-party benefits, you need to make sure that those are reconciled. So I think that that legislation in 1457, while it is correct in talking about what I'll call on-app, or I believe has been referred to as stage one, I think it's very good on that, but I think it is missing the notice aspect, it's missing an ongoing notice aspect, and it is also missing a clarification of just what the scope of livery exclusions will be. And the California law, and it's why it's an evolutionary process and a learning curve. The California law is further along the path in that end. On those
But
ends.
I want to pick up on that. So the California law, as I understand it, stage 2 and 3 identify $1 million of coverage. The amendments to AB 2293 now put a new requirement around stage 1, which is the gray area, and that's $200,000. The California Commission set forth in an order $100K when you have one person in the vehicle, and then $300K for more than two people in a vehicle. And so I just want to pick up on stage 1, the legislation. I mean, if Senator Fontana looked at this and said, okay, we're going to address stage 1, we're going to Pennsylvania's going to go at 50,000, maybe 100,000, maybe 200,000. Your membership okay with that?
Our membership be okay with it, but what is missing in that, and this is, I believe the bill right now talks about that it would be primary. And our concern, I mean, frankly, our concern is not so much with the amount as with who actually ends up covering.
Right.
The amount, I mean, if you want to say 50, if you want to say 75 or 100, I mean, that's a marketplace decision and a need to sort of see, I mean, as has been mentioned, the personal auto insurance limits are lower than what you now require for taxis. How much more taxis or any livery service should have, that's, I mean,
So let me ask you a question, hypothetical. You and I are going to an Eagles game. I get in a car with you, we're going in a Philadelphia cab, and we get in a fender bender. You feel more comfortable in the Philadelphia cab with the insurance limits, or you feel more comfortable with the requirements set forth in the $1 million liability umbrella coverage for an Uber driver?
Depends on what the conditions to access that are. In terms of the dollar amount, would I like to have more? Sure.
Okay.
But what?
That's where I'm going with this.
Okay, but
it's not a good story to tell for incumbent cab companies, those limits now. And we're moving in this direction towards limits that get us up towards $1 million and deal with the primary piece as identified in the California legislation.
The challenge, Mr. Chairman, the challenge is, I mean, some of this is here. As a claimant, I always want more insurance. As an insurance company, I always want to sell more insurance.
Right.
But the key as to whether it really is more coverage isn't just the dollar amount, It is the accessibility and the clarity of that. I would say, I mean, one of the reasons I'm a supporter of the California bill as I'm reading it, last night and this morning, it not only has those increased amounts, but it makes it very clear that you go to the TNC's insurer. You don't, have to choose between door number 1 and door number 2 and door number 3. That is the exclusive carrier. It's not the primary carrier. It has the sole duty to defend. So it's a very clear source of coverage in both amount and in process.
And I'm
that's what's missing in the Fontana bill.
This will be my last point. I'm a firm believer in dealing with this issue that the insurance markets are looking for regulation so they can develop the product. California is a step in that direction. Pennsylvania, hopefully through Senate Bill 1457, is a step in that direction. And I ask you this because you admitted that these surplus lines operators, like James River, like U.S. Liability, who will probably continue to venture into this market, look, the Allstates of the world and the State Farms of the world, I get it. They don't want to write this book of business. They don't. It's a fact. They're not playing in this market. That's why you have surplus lines operators, and you admitted it, they're A-rated companies. They have the balance sheet bandwidth, they're properly reinsured, and that's where the TNCs and the lifts of the world are going to get that insurance product. And we shouldn't sit here as regulators or you as a head of association saying, well, that's kind of a bastardized market that they have to go to. It's not. It's no different than going to the state workers' comp insurance fund to get your insurance. So
let me clarify something on that. For state workers' comp insurance fund is covered by the Guarantee Association for that line. Let me clarify 2 things on that. We represent surplus lines carriers just as much as admitted lines carriers. Okay. It's just there is a distinction. And if all you have in a given market are surplus lines carriers, I would suggest that's not your healthiest market. Doesn't mean it's a bad market, but it's not a great or a very strong
underwrite risk, right?
But frankly, I mean, we have companies that have both admitted and surplus lines carriers under their umbrella. But one of the points that you just made is that you mentioned Allstate and State Farm, but I assume you mean personal auto insurers generally don't want this. To the contrary, we have a number of our members, personal lines auto insurers, and we have commercial insurers that want this market as commercial auto insurers. We also have personal auto insurers that want to enter into this market and provide this. So, they regard this as a new marketing tool and a way to develop market share. So you won't see a reluctance. What you do see among all companies, our surplus lines carriers, our commercial carriers, our personal lines carriers, standard, substandard, preferred groups, wherever it is, what they want is clarity so that when they offer the coverage, they can say, here, I know what my risk exposure is. Mm-hmm. And right now, that's not there. I think the California bill does that. The Senator Fontana's bill is a step along that way. But since his bill was introduced, we've learned more and we've seen more.
And from a injury claimant standpoint, it certainly helps on who's going to cover the claim, because then you don't have the 2 companies fighting, and your client who needs the compensation isn't sitting back watching a declaratory judgment action.
And there lies was the California issue on New Year's Eve, where
right.
Who pays the claim is what's being debated now. And I think, again, AB 2293 now clarifies that. And this is my last point, is what 1457 is most likely lacking then is the clarification around stage 1 limits. That's only way I look at it is we agree with California, $1 million coverage in stage 2 and 3 of that app being deployed. The stage 1 piece, when the app is open in California, it's $300,000. In Pennsylvania, we're kind of silent on it. And so where I'm going with this is, if we get that codified in legislation, that would probably help your membership.
Yes.
And the trial lawyers.
And I didn't realize 1457 doesn't have the notice provision, but I think that's also important.
Okay.
Mr. Chairman, just for clarification, we're not opponents of 1457. But it is a learning curve, and we are learning more. I mean, the amendments that were recently introduced in California, I think California sort of started out, probably behind where Senator Fontana's bill is. Since then, and that's where it's a dialogue among TNCs and insurance companies and trial bar and regulators and consumers and taxi services. Since then, other liability issues have come up. I do think that what is important in the California bill is that it clears up that insurance policies so that there's no debate on the different languages among livery exclusions between Company A and Company B that are almost inadvertent. What the California law says is the personal auto insurance doesn't apply unless it expressly, by design, applies as a rider. That's what's needed in Senator Fontana's bill, and I think that's, I think that could be required within the regulatory structure here, too.
Yeah, unfortunately, time is not on our side. In order for us to adopt the regulation, it's a 2-year plus process, unless you would agree we can go final omitted, which we tried that once, and once was once and done.
And unfortunately,
So we don't have time. I mean, time is not on our side here. You got a market that's evolved, hopefully an insurance market that evolves, but we've got to, I mean, legislatively is the pathway forward.
And there are a bunch of people here and in back
I
of
would
us.
respect your opinion.
2 years time in legislation is lightning fast too.
Well,
and that's just we've all dealt. But I would agree. I mean, I think there's. I wish we could get it done this fall. I agree with Mr. Cooper. In 9 days, while it might be my fervent wish to get something done, I don't know that that's. I just don't know that that's what the legislative market can bear.
Right. Okay, good point. Do we have a second round? No second rounds? We are going to adjourn for our, it was supposed to be our 1:15, or excuse me, our 12:15 break. And we're going to reconvene here. I'm going to push it back 5 minutes to 1:20 p.m. James Ney from the Philadelphia Parking Authority. And again, I want to thank our presenters here this morning, and we'll reconvene at 1:20. Judge?
Very good. Thank you,
that?
Mr. Chairman.
That was.